among other things, and what Margaret has been going to various clubs talking about, which is loss of access to financial services at home and abroad. In other words, this is people who are losing bank accounts abroad, and people who are losing their bank accounts in the United States. Rather than going on about that right now, I think I'll let Darlene, and then we can. Well, just one sec. Just finish this slide. Okay. But you've been reading about this in the FAWCO forum. You've been writing to us. I mentioned the other day that we need your stories. We really do need your stories, and I think that I said the other day that the Treasury Department wants not only the anonymous stories that Margaret has been building up and collecting from you, but also anyone who is willing to say, I'm Lucy and I'm mad, and this is why. Because they can only quote things where the person's actually said, this is okay for you to use. So if you're having trouble, please write to us. Please let us know, and let's talk about whether you want to kind of make yourself public or not. State Department, well, maybe we can come back to this. Let Darlene do her thing, and I'm going to come back to a couple of things that we learned from the State Department about citizenship, but that's a different subject, so we'll come back. ACA, are you going to talk about this?
The residents?
Yeah?
That's your thing. I mean,
Well, it's not really.
I'd be happy to talk about it.
No, American Citizens Abroad went with a specific proposal that they were very much supporting to ask Congress to change its entire tax system. We're all taxed on the basis of our citizenship, and there's only a couple of other countries in the world that tax people worldwide on the basis of their citizenship as opposed to their residence, and most of us don't like that. So ACA has come up with a proposal for residence-based taxation. In other words, if you're in the United States, but if you live in France, you'll be subject to French laws. We frankly decided that it was too huge a proposal, and there are some parts of it that we're not completely comfortable with, and it's really their proposal. They know they know where it comes from and why they're doing it, so it's not something that FAWCO or Arrow is actively supporting, yes.
For your information, the other two countries that require taxation to be paid based on residence are North Korea and Eritrea.
Thank you. Okay, I think I'm going to stop and let Darlene.
What a collection.
Yes. No, sorry. Wait. What happened? Oh, okay. Let's just leave it there for the moment. Here you go. Okay. Darlene, what?
I just had a question on the HR 97.
Yeah.
597. If it does pass, what it would be important next step is to ensure that whoever is on that commission is actually more aggressive in their thinking than necessarily people that are a bit more. So, is there a role for us to play?
Absolutely. There are 15. It creates a commission of 15 people, right, who are appointed by the both parties in both House and Senate, and then other people up to about 5, I believe, who represent overseas Americans in various ways. So yeah. Darlene Hart, U.S. Tax and Financial Services, a major FAWCO sponsor, a major conference sponsor. And someone who has been in a number of clubs, either Darlene or her associates with U.S. Tax and Financial Services, to talk in regionals, talk to clubs about what she's going to talk about now. So she can also come and see you. You should know that.
Now we've, first of all, thank you very much. And we have enjoyed sponsoring FAWCO and have found it to be very good for us. And it's nice to get out there. We do an awful lot of free technical seminars for law firms, accounting firms, banks, trust companies, and also various clubs. And so I think we've been to quite a number of your clubs. To me, it's about educating not just the professionals, but the Americans who live abroad. as to what they are responsible for as an American. Now, I have to say, I found some news yesterday that Lucy just rocked my boat. I could not believe. You know all about the voluntary disclosure programs and about the UBS case and all of these Americans coming forward under voluntary disclosure. Well, the U.S. government has just notified all of the Bank Leumi customers in Israel that all of those who actually applied for the OVDI voluntary disclosure program will be kicked out because they do plan to actually prosecute and go after Bank Leumi clients. Now, this is Bank Leumi, a major bank in Israel. Evidently, Bank Leumi was not coming to the table and, helping the federal government deal with their affairs. And so the U.S. government has come down with a hammer. I have never, ever, in my 30 years of doing this type of work, seen this happen. So the IRS is very serious. Just a second here. Literally, this just came off the press yesterday. So we'll be putting something on our blog, and you'll be able to read a little bit more about it. And I will send over the articles and the stuff that we have. But the U.S. government is very serious about not just Americans living abroad, but about Americans living in the United States. And a lot of it is Americans living in the United States. And I have to tell you, in Israel, there were 24 IRS agents doing audits, starting in January of January 2012, because there were an awful lot of people who were doing tax returns down there, and a lot of people were claiming dependency deductions and getting huge refunds for their 8 to 10 kids that they kind of didn't really file or pay any tax for. So they were abusing the system, I would say. Anyway, those people, whoever prepared their returns, would not support them under audit. Now, as far as I'm concerned, that's a major sin. Anybody who you pay to prepare your tax return, if they don't guarantee that they will support you under audit, do not use them. Do not use them. Because if they are taking aggressive positions, they're going to leave you in a world of hurt. So this is just a word to the wise, and this isn't really what I came up here to talk to you about, but yes, ma'am?
Very quick question. Last summer, I spent time in a discussion group in Chicago where a Jewish group tried to talk Americans into moving to Israel to settle there.
Mm-hmm.
One of these people that were in contact with a very close friend of mine, 70 years old widow, and I fought like hell to get enough information to talk her out of it. She was brainwashed.
Well, there's nothing wrong with moving to Israel.
Right,
it's just that you have to file returns.
No.
You don't stop.
No, that's the point where I'm getting to.
Oh.
When I said, how can you handle it there, or what your cost of living and having to pay taxes still in the States was totally denied by the two gentlemen that did the recruiting. They say Americans that live in Israel do not pay tax to the U.S.
No.
And when I say it's impossible, it seems to be the only country in the world, and they say yes, because the reason, when I didn't, of course, give up, so they said the reason is the minute a U.S. citizen moves permanently to Israel, he gets a dual citizenship, he gets an Israeli passport, and is therefore given freed from paying U.S. taxes.
Well, I have to say, that's the last sentence. Everything was true up until that very last sentence.
Yeah.
And to be honest with you, there are an awful lot of Americans who actually move to Israel. So there's quite a huge group of Americans there. And we have been preparing tax returns for quite a few of them. And to be honest with you, the Israeli tax rates are a bit higher than the U.S. tax rates. So in effect, a lot of the people don't pay tax, except for the problem is when you first move to Israel and you immigrate, your first 10 years are free of Israeli tax.
Yeah, but
So during that time frame, you're still paying U.S. tax. Anyway, let's
people here. No.
sorry, let's move on.
True, that's all.
I think we all know that it doesn't matter what country you live in, you are subject to U.S. income tax and you have to file. I mean, and I have to be honest with you, a lot of the CPAs in the United States, in fact, I talked to a lady yesterday who had it in writing from her CPA in Chicago, and I'm from Chicago, so, but it was a CPA from Chicago who told her when she moved to England, she only had to pay British tax and she didn't have to, file U.S. returns anymore. I said, oh dear, this is coming from the CPA community. My brethren, what can I say? It's a lot of the people and a lot of the accountants in the United States are not familiar with the foreign side of the U.S. tax law. They're very good with domestic, but not good with foreign. Before I answer any more questions, let me just get through a few things and points, because I've only got 15 minutes to talk to you, so I want to make sure I drill home a couple of points. First of all, on this voluntary disclosure thing, at the end of the day, Americans living abroad, this is, in the past 30 years, this is the easiest and the best time to come forward and file your returns if you've never filed before, or if you got behind. They ask for 3 years worth of returns, no penalties. I don't care if your tax bill is $100,000.
Darlene, not quite so close to your mouth.
Oh, sorry.
Yeah.
Sorry. Anyway, I'm just excited. No, but I don't know how to get that point across to people who have been living abroad for years, or who have just moved abroad, or just kind of got behind. File your 3 years worth of returns, and file your 6 years worth of FBARs, which is the report of foreign bank account. And you should not be paying anybody to prepare your FBAR forms, ladies. If you know your name and your address and your social security number, and you know the name and address of your bank and the account number on your bank, you can actually look at your statements and pick out the highest balance. It is not difficult. It is truly not difficult, so do not pay someone to do that for you. Get onto Google and type in FBAR, and they'll give you the form. Just type it up, print it out, send it in. The deadline is June 30th. Okay, now, just
Let's save questions.
Save it for a minute. Okay, because Lucy's going to cut me off. Trust me on this one. In 15 minutes, okay? The next thing is, on these FBARs, now we've got ladies, American ladies married to foreign nationals, and the biggest issue is, what about that joint account? Yes, that joint account. You have to file an FBAR for the full value of the joint account if you have signature authority over that account. Now, if you have a power of attorney upon death, okay, you don't have to file an FBAR for that account. Well, no, wait, take that back. You must file an FBAR for that account, but you do not have to report 50% of the earnings on that account. Okay?
Well, careful. For FBAR, they don't have to.
No, they have to file.
But they don't have to report earnings in any event for the FBAR.
Well, hold on. On the FBAR, you don't report earnings.
Right.
Okay, but the money you earned in the account, if you own the account, if you have signature authority over the account, if you have a beneficial interest in that account, you're supposed to report as taxable income any of the dividends, the interest, the capital gains, whatever is in that account, okay? Now, I have a big issue always comes up. How do I treat a pension? Okay, how do I treat my foreign pension? And how do I treat my foreign deferred compensation and things like that? Your foreign pension, and you have to look at the treaty, ladies, I'm sorry, but most pensions, foreign pensions, are not U.S. qualified pensions, okay? So in theory, and you have to look at the treaty, but in theory, employer contributions to this pension are normally still included as taxable income. It's part of your benefit, okay? In employee contributions, you're supposed to be taking your gross wages, okay, and not taking a deduction for the money you put into a foreign pension, a Swiss pension or a British pension or whatever pension you've got. So you always report gross income, but you should also report the employer contributions and the growth in the plan. And if the plan goes down, let's say the value of the plan goes down, you actually report the loss on the plan. So you basically report the income and the loss. Now, a lot of people, we have taken a treaty position on quite a few of our clients because their pensions are quite large. In a treaty position, it depends, again, what country you're living in, whether or not you can actually take a treaty position and advise. In Switzerland, we can. I don't know about, in England, we never took this position. You have to look at the country that you're living in, whether you can take a position. But in Switzerland, we were able to take the position because of the treaty that you claim, well, I'll tell you what, it's not closer connection, it is the benefit and the harm that you're paying tax on the pension when the money goes in, and you got to pay tax again when the money comes out. And that right there is what you're supposed to avoid, what these double taxation agreements are supposed to avoid. If you would like me to send you and give you a copy of that treaty claim, please, just email me. You've got the details on the website, and I'd be happy to help you with that. But it's really treaty specific, so you've got to get a hold of an accountant in the area where you live, who understands, knows, and it's not just you want somebody who knows what they're doing.
When you say treaty, you mean the tax treaty between this country and the United States?
Yes, the U.S. UK or U.S. Swiss or U.S. Italian or U.S. German. You have to look at the pension. Articles usually 18 or 19.